Are you someone who's self-employed or own your own business and you're wanting to invest in real estate, but you don't believe you qualify for a loan because maybe your tax returns aren't where they need to be? Well, today we're going to show you how there's a new program where you're going to be able to take advantage, and no matter that specific situation of being self-employed, there's still a way to get you pre-approved and qualified for a loan. This program is designed for two types of folks. Someone who's an independent contractor who might have lots of employers but gets W-2s. We're going to show you how you could use those W-2s to qualify for a loan without having to show your tax returns. The second, if you're a business owner and we're able to show consistent income that's acceptable to the lender, where you could use those types of deposits to qualify for a loan. And again, without showing and having to present your tax returns. So terrific programs. Traditionally, it's really hard to get qualified when you're self-employed, but these programs are going to show you how you can take advantage of that. Hi, I'm Juan, and today we sat down with Phoebe Tudorov with Sage Trust Mortgage, and we're going to talk to you about the new self-employed programs in order to get a loan. We're going to show you that if you bring in income as a 1099 employee for several employers, or if you own your own business and you're able to show consistent deposits that are acceptable by the lender, how either one of those programs is sufficient enough to get a loan without having to show your tax returns. So terrific program. A lot of people sometimes believe that just because you're self-employed, there's no way you could get a loan. We're going to show you a way that there is, so tune in. There's a new program that we love. And so if you're looking for units that are 5 and 8 or even 4 unit buildings qualify for what's known as the DSCR. The reason we like this is that this is a newer program, allows you to buy a property with 25% down, so long as it still has to meet the ratio.
Correct.
So this is not going to be, don't assume the 25% down for every single property, because we have to look at its income. Is the income where the bank needs it to be? The reason we like this type of loan is that it's interest only for the 10 years.
It can
Talk
be.
to us about
Yes.
that.
These loans are offered on a 30-year fixed mortgage with a 10-year optional interest-only period. So it is still a 30-year fixed mortgage, but for the first 10 years, if you choose that option, for the first 10 years, you're going to be paying interest only for that loan. And then years 11 through 30, it becomes a 20-year amortized loan where you're going to be paying the full payment based on 20 years. But for the first 10, you have that time to really figure out what you want to do with this property and have the lower payment. You're still paying interest only. You're not adding any money onto the back end of your loan. You're going to have the same principal balance, but you're going to benefit from having the lower monthly payment because it is interest only.
That's the key. You're getting into a new investment. Now, whether it's 4 units or all the way up to 8. Interest only, the reason we're excited about it is that it really reduces your payments. So for an investor who buys a property and the rents are good, but you believe it could be better, or you could reposition it, or there's things that you could do to make that property add value, bring in more income, that 10 years buys you a significant amount of time. Mm-hmm. Now, probably the most exciting news is that for the first time ever, Phoebe, we're able to offer this type of loan. So this is 4 to 8 units outside of California as well. Talk to us about that.
Because this loan is considered a more or less business loan.
Okay.
We are allowed and are offering this loan in 29 states, including California, because of the type of loan that it is. And it's actually, just a little correction, it's 1 to 8 units, not just 4,
so
4 to 8. So this can be for a single family, for a duplex, for a triplex, a fourplex, and 5 to 8 units.
Okay.
So 5 to 8 units have a little bit different qualifying than 1 to 4, but you can still use it for a single family purchase, rental. This is an investment property purchase, for 2 units, 3 units, 4 units, and 5 to 8.
And the reason why this is a unique type loan is that someone might say, well, why don't I just go to my typical bank? Because your typical bank is going to require 25% or more down. The interest rates could be...
They'll probably be a little bit lower than this because this is not an income qualifying program. You can be self-employed and not be reporting any income on your tax returns. Right. But if the property qualifies and you have the required down payment, you can buy these properties with this type of loan without any income verification. So
that's a plus. And also the traditional bank may not give you the first 10 years interest only.
Correct.
They're going to want to, what they call, amortize that loan. Means your payment's going to be higher. It's going to be harder for you in the first 10 years to what we call carry the loan. In this case, it's a terrific program. In the past, we've had a lot of our viewers reach out asking if we do loans in various states. If you're looking at investment properties and you're trying to utilize this specific type of loan, again, it's called DSCR. Reach out to us, check with us. We'd love to work with you. So there you have it. I hope you enjoyed the video. You know what I love with sitting down with Phoebe? She is following another market. The whole lending market, it's a world in its own. And so I learned a lot. I hope you did too. Make sure to like, comment, and subscribe. And again, we service and have affiliates nationwide. Make sure to reach out. We'd love to assist you.